And I'm just sharing one more thing to it has been a very busy day. I apologize for taking a longer time to connect to all you guys. Hope that you guys are well. And I'm just sharing one more thing. There we are. There, I just have to mute the YouTube. And has been a few good weeks, and we haven't done this. And sharing. Just bear with me, guys. So forwarding to one of the key partner here. So hi, good morning, everyone. Sorry for the wait. A little bit goes later than o'clock. And can you guys hear me today? You guys all hear me okay?
Perfect.
Okay, thanks, Bruce. How are you?
I'm doing very well. Thank you very much.
Well, we got a whole gangs here. So yeah, I slacked off a little bit last week, just so you guys know, and I was not feeling 100%, and stay at home with the little one, and it's time to get back right to it, and see so many guys here and girls, and joining us online. And thank you very much for joining us, and let's start it. So at the beginning of this virus thing, and I think it's about March, April. So I started this call, and because honestly, the library closed, and so I can't actually have physical meetings. So I start to have weekly Zoom call, and introduce people, and we have updates, market updates, and also different things. But very every different meeting we have different topics. But today's I really want to talk about the market updates. And I read a very interesting post on 2 days ago, talk about how apartments in the US primarily, and and I want to give you an update on that. But yeah, no, 27. Can you believe that 27 call since March, and something that I'm really comfortable and really happy to continue to keep doing it. Just give us an exposure to keep chatting on a weekly and weekly basis. So I start a little bit of the story of Hay2Brick and myself. So we started investing in Canada since 2006, and we have since invested in US, Canada, and my personal history is in Hong Kong, and we invest in China as well. So we're very comfortable in single families, and then eventually we entered in US in 2012, and that's my background. And finally the town in Phoenix, and while everyone's telling us that we're crazy, and we were still doing that as a personal basis at that time. And my wife and I go book a ticket, and not one-way ticket, right? And go to Phoenix, Goodyear. And Goodyear is basically is an outskirt or suburbs of Goodyear, of Phoenix. And when we began, we see, I forgot, like probably 10 buildings, 10 properties, and we offer them 3, and then eventually signed. We signed dotted line when we go back to Calgary. We purchased 1. So that's how I started in US in 2012. It's very fruitful experience, and what I find is, so I'm meeting Alex on the line. So what I find is actually just like investing in Hong Kong, it's just like investing in China. It's something that you can learn, and you need to create your team. And it's basically like what we're doing in multifamilies. And we have one opportunity that for people that want to chat with, talk about that, is very exciting. we are able to offer 18%, up to 18%. My lawyer always correct me for 5-year hold. But today, primarily, I want to update because we actually haven't done it for 2 weeks. I want to update what's the market like. And I think the market is actually going to the direction that we like. So number 27, I have to update this, and a Zoom call, as I said, at the beginning of this year. And we have over 30 meetings. And when we have library meetings, physically, we actually happens in library, and also bring people to my office here for my boot camp and learn about how to invest on Saturday. And there's quite a bit of people I've been able to have the opportunity to talk to, and glad to do so. And just one of those. So apartment updates, as I said, and we're going to touch on a little bit for people who want to chat, and we can talk about 58 units and for 18% per annum for 5 years. A little bit of our philosophy. Hay2Brick is about buying right. We want to create the values from day one, from asset optimizations, from value add, and whether that's management play, my apologies, or whether that is increasing the income and do small renovations, and getting revenue from day one is really big. That's how we pay investor from day one. So meaning that you get in touch with real estate professional, have good listings, and meaning that you do your due diligence correctly, and also meaning that you negotiate correctly. Time like this is very, very, so this is not new term. I have talked about this many times in my meetings, but the key thing is you have to buy right. But time like this is very interesting because in a way, we're still experiencing this what I call pandemic, or or whatnot. A lot of people, including us, everyone is affected. So but what we're predicting in the beginning of March and May is the market will adjust. I'm showing you 4 interesting slides that is actually I didn't create that. I extracted from National Real Estate Online. You guys encourage that, go to that website a lot and find the information, because it actually talk about rent reliefs, talk about occupancies, talk about delinquency, talking about different asset type, how is it holding up. That's not something new. I talk about it days in and days out, week in and week out, because it's very important when you get in the market and you know that you kind of have the whole history, right? Like, at the beginning of this year, we have our extraordinary event happen. So now we're progressing in the midway, and now in the US, you're talking about eviction ban, talk about credit crunches at the beginning of the year in the summer, and now we're getting a little bit better, and now talking about price adjustment. We're going into the Q1 and Q2. What is it like? So I want to give you some feedback. I want to give you some what I've seen, because it's kind of like my friend like to say that it's kind of really boring. It is very boring because it's going to happen, but it's like watching paint dry. I'm still his line. He's going to laugh, and because it's so boring, the fact that is correcting, but it's not fast enough or whatnot. For people like us, we like to analyze the market. We like to looking at which market to go in at. We can buy, have value and stable income, stable jobs. Forget about the pandemic. People is going back to work or getting a new job. But when you invest in very pricey place like California or New York or is really, they talk about the rent is very much challenging. I read a report on yesterday, 90% of the restaurant in NYC, New York City, have not paid the rent last 90% of the restaurant. So of course I'm not in the restaurant business, but that is that's crazy, right? That's crazy. So so it's something that, on this few slides that we're going to talk about. But I talk about, you have to buy right, you have to create values. My partners cannot say it enough. So he's all about value creations, and I just smile because that's what he's all about. And, that's what we are all about. When you think about that, and take a step back, you have to create value from day one, generating revenue from day one, meaning that you buy the properties, have cash flow from day one, and give, and enough returns. So it's with the 7%, and for our projects or whatnot, you have to give them, you have to give investors like something to work on, so that to pass on this stage. Strong management, and major market that actually have enough people that actually sustain your apartments. So I keep these slides because I'm just going to fly through it. Pricing will correct it as we're going to move on. It's already slowly corrected. There's terms, and happen again and again, that's called price discovery, meaning that there's a pull and tug war between seller and buyers in the US right now. And basically, when will the seller be slowly realizing that the price need to be coming to the point that the buyer will buy. So we at that time slowly, because the PPP money, stand for Paycheck Protection Plan in US program, that money has dried up on 31st of July. So, or first week of August. So the normal people that getting a check from April, May, have till through the July, and they haven't get a check for like 2 months now. And I know there's so many talks, and I actually watched the debate from yesterday from Biden and Trump, and so entertaining. I don't know how many of you guys have watched it. I watch it. I usually doesn't watch a debate, but it's very entertaining. Never talk about any issues. Like, there's no real issue to talk. But basically, so the election is coming. So, but buyers like us, at the beginning, I remember I talked to a guy who owns 1,600 units, and he told me, you wait and you strike. I think that's where we are heading to. And opportunity, I already seen so many listings that I haven't seen for the last 2 years, and big and small. The biggest upwards of 2,000 units, and lowest 50 units and up. So it's very interesting time. Money's drying up. Many owners have slowly be realizing that whether they're going to have challenge paying the mortgage, or managing keep the maintenance going, keep the lights going. So Q1 and Q2 is really something that we pay a lot of attention right now. And people like us are raising capital because of knowing from experience what it can happens in 2008, and what happens on from last recession. So so a little bit about myself. So we really set up this meeting is because we know investing in apartments can cash flow. You should just know, because I am a single family investor too. You cannot cash flow in single family investment. I cannot anyway. And investing in something that you can actually go to, whether it's US and Canada, you can actually touch on, and a value that you can never get in Canada. That helps, because what, we know that we're buying such a great value, and we bring along, my Brian Tracy is one of my mentors, and we have a good fortune of writing a book with him. And but come down to knowing that you can gain capital, growth, and you can have cash flow, and your asset is backed by physical hard building, that is still at, 90% plus occupancy. And and if you're looking at, I have one chart talking about um, hotel, industrial really doing really well, along with multifamilies and offices and different kind of investment. So talking about how investor favoring or like have a preferences, so to speak, when you talk about different kind of asset type, it's really important because when we talk about investment, a commercial real estate investment, you have to know what your competition is. You have to know what market do well and what asset types is doing well. So um, I over the years I also start on creating a mini course, and you guys can check it out. And I think you guys should because it's such a really like I learn it, and then I from other people, and then and put it in a way that is actually easy to understand and is a video course that you can actually check it out. What it does is basically telling you how you research, how you raise capital, how you build credibility, right? And creating a team. And the team is very important. You live or die with the team. And eventually, underwriting. Underwriting is so key right now. Is always the guy that I told you that have 1,600 units. He told me it's like, Howard, it's a moving target. What do you mean underwriting? So yeah, so you have to know like how do you offer, like and when you say you can fix up the apartments, and you have to know what's your competitions. That's a lot of things you have to do in order to buy one building. Just like I come across a lot of investors want to do it as well, and that's great, and that's how I did it years ago. Years ago, you really need a team. You really cannot do it all by yourself. And I have to give you some nuggets by coming to meeting like this, because it's I believe that's more enough for everyone, um, whether in Canada, whether US, and whether you're single families. And that's why you have the partner. By the way, that's why you have the partner. So today we're going to go through a few things. Delinquency. Um, and delinquent rate, that's something that really watching on national multifamily website, I think in US, then it's talk about, from it's tracking from the beginning of pandemic, in April, April, March, and tracking about that. But this one is a little bit different from National Real Estate Online, so a little bit different of audience. And then the rent reliefs and competition. I'm talking about buyers and sellers when they property owner like us, what are the expectations? Are they selling it? Are they buying it? So, and they give you a little bit of trend going in, right? And since 2014 or 15, what is it like in this year, next year? And the cap rate outlook is really important. Like, is it depressing, or is it going up higher or lower? Is what constitutes to eventually have the equilibrium of whether it's going to be buy or sell a market, all these things. So anticipation of delinquency rate, is really high, like high level. So the diagram down below, basically telling you, in multifamily sector anyway. So 88% of the investor responding that, the delinquent rate is going to go up. Just no other way, right? When you have money drying up, when the economy hugely disrupted, we talk about 90% of the restaurant who is not paying rent for last month. So we, and then even though that is different sector, right? But it's give a gauge of where we are. You don't need an economist telling you that we are not actually doing so good, right, on our economy. So 10% of people will predict there's no change, but only 2% think that it could go for. So delinquent is basically like, how many mortgage will go with that through, like, or go to REO, or go to foreclosure, or forbearance, one of the I think emitter is talking about. So that's huge, man. That's huge, and most 88% of the people think that it will go up. So this is how pessimistic that it is, but that's just like as a poll from investors like you and I. And then rent reliefs is something that I do give rent relief for my tenants because I want them to stay. In fact, some of my investors tell me, and I hear her really well, loud and clear. I rather because like investor different um, inclinations. So they want you to work with like tenants, and we do work with tenants because the fact is you cannot evict every single one who miss a payment. Is a disaster ways to right now, especially at the beginning of pandemic. We basically I tasked my property managers. We know it's coming in. We have to make sure we have enough war chest. Number one, enough cash in the bank. Number two is you have to be able to work with tenants. We have been getting late. Second week. We never do that. During good years, but second week and third week and even fourth week, we haven't get rents, or they going to be because they waiting either waiting for the rents from the paycheck from the government. What Trump did he wrote one executive orders, and that orders give state by state a different a different um, 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 different state have an ability to able to extend the PPP or not. So Ohio did that, and some other state did not. But long and short is, so this is the percentage. 82%, almost most of the tenants have request rent relief, some sort. But the good thing is only 61%, also big chunk, have 25% of the tenants request from that. So it's kind of aligned with what our project is, and you have to pay really attention on your tenants mix. You have to be really on top on your communications to your tenants that we are working with you, but please you also have to work with us. Having millions of people work kick out on the street is no good. That's far from good. But at the same time, you also have to balance between they're not competing, but there's a balance need to be made between having having a viable business in where we are in apartments, and also and keeping the people have the roof on top of that. So that's a delicate balance, and that requires constant communications. That requires knowing your market really well. And not when I talk about communications, also not only to the tenants, but also to your PM. Last but not least, communicate with your investors. So when I going in with this, so I'll write 2 emails to my investors. So I know that we're going in. I tell them where we're at, on occupancy. I told them this is what we're gonna probably will see. No one's have the crystal ball, but this is what we're gonna probably gonna see. People is gonna be struggling with, with rents. So, but constant communication with the investor is the key. So, moving on to the next slide. Competitions on the sidelines. So sorry for the typo. Here we are. So Q2 so basically this is like how much people is actually going in the market. 13.9 billion in apartment sales, volume, and that was 70% compared to 2019. So that's only 30% transact. Because year over year in apartments, there's over 100 billion, 100 billions transact on historical basis. And I showed that on last previous Zoom call. 54% expected to hold, meaning they don't want to sell or buy. And if you're looking at this chart here, 2019, the green one is to buy, and the red one is to sell. So people don't want to sell. If they have to sell, they have to sell. That's where people buy it in last year. They buy really too high, too speculative on the rent increase, because the rent has been off the chart for many market in the US. It's just go so high, right? And that's driven by a lot of different factors. But 30% by long shot is most people don't want to do anything. If you look at 2019 to 2020, so that's an increase of almost 8%. Don't want 6%, don't want to do anything. but the buy is still about 30, about one third of that, but there's less people want to sell. So meaning that people who are creative, we're broker relationships, finding the value, and also maybe you have to get in touch, right? Maybe you have to get in touch with others, just direct contact with your market from the seller. We'll give you some deals. So cap rate, right? What's cap rate? The two side, let me explain a little bit here. So 63% of the people thinking that the cap rate will increase, meaning the price would go down, okay? Get layman terms. And 28% predict that it will be decreased. So basically you see from 2019 here and 2020. So both that's increase on people or investor thinking that it will either go up and come down. So that's a tug of war here, obviously very interesting. There's more people think that it will go up. That's about 10% increase, thinking that because of the interest rate, probably because this interest rate is more affordable, the price will go up. And at the same time, there's also another 8% of people thinking that the price will actually go down. So who win, who lose, who doesn't know. And what is actually shrink down is in the middle part. That's 9% of people think that will remain the same. So, and from history, so it's 30% that think that the price will be staying as is, and then the market will stay as. So there's less people thinking that. There's more people thinking that it will actually go up. There's more people thinking that it will go down. Who win, who doesn't, we don't know about it. And but that's what it is. I want to give you a short, quick, and small snapshot on where we're at the market. Rent relief, competitions, and delinquency. We are heading into the Q4 right now. And the last Q for the year. A lot of people agree that the price changes will not actually happens until Q1 and Q2. So there's a lot of buying opportunity, and that's why people like us go into the market and talk to investors. So this is my home study program. So we are very happy that a lot of people signing up. Thank you very much, and keep coming. And that's what we do. Find the right market. Find the right deal, and we're interested in getting deal flow because that gives us the opportunity to find the right deals. Execution is really key, and we attract people who have a lot of years experience, and whether that is managing, whether that is helping with finance, but ultimately we want active partnering with investors, people that are able to do well, earn a lot of cash during the holding term, and be well and be doing well for that. So I promise you that I'm going to showing one slide, not a lot, but this is what we're doing right now as we speak. At Cincinnati, Ohio, we have an opportunity that we want to talk about, only for people who are want to find more interest, that definitely want to talk to us, because we're actually doing the race for that right now. That you can able to earn up to 18% on return per year in a 5-year hold. And it's very interesting because it's ultimately we want to give investors the opportunity to earn big return, and earning the cash flow from day one, and that is backed by physical asset and not single family, but it's a big buildings, right? It's in a big city, and we know we do well because I've been in that city for 5 years now. So that's what I want to share with you. And on market updates and contacts for the investment opportunities. And want to say thank you for all you guys, taking the time to join us. And it's a pleasure to be able to talk to you guys. And well, I know that's not an opportunity for you guys to chat, but let me know if you guys want to stay in the chat or like get in touch with me. And I'm here next week and the week after. And hope you guys have a wonderful Wednesday afternoon or morning. And thank you all you guys joining us. And I see a lot of happy face in the chat, and looking for the chat, looking forward to connect it, and hope you guys stay safe and stay healthy. Thank you very much for joining. And talk to you guys next time.
Thanks, Howard. Have a good day.
Thank you, Bruce. Thanks for coming. Have a good day as well. Hi, Diego. How are you doing?
I mean, I missed your webinar completely. I thought it was 1:30. I came in like really sharp 1:30.
Oh, my apologies. So
No,
sorry,
fine.
I just going to yes, you I just 1 second. Can you hear me? I'm hearing you a little bit harder.
I hear you perfectly.
Put-
You know what? Sorry. Way better?
Oh, oh yeah, fantastic.
Yeah, sorry.
The way we
I had my mic on, but it was not plugged in. Sorry.
Oh, that's
My bad.
That's good. That's all good.
So anyway, I mean, sorry, I completely messed up the time, but just wanted to understand where are you based at? Like I know this opportunity you're sharing is in Ohio. Just wanted to. You're based in the States?
Yes. So let me stop the recording because I want to talk about 1 second, Diego. Stop the recording. So stop. Sorry. Shares and stop recording. I don't know if I can share it. Hang on 1 second. There you go. Sorry. Yes. So it is actually in the market that I know really well. I have been in the market since 2016. Know a lot in the market, and we got our first two in 2018. It's not in exactly the same city, but it's in Ohio. The reason why we invest in Ohio because you can find properties that's really affordable and able to cash flow from day one. And just give an example, you buy in at 40,000 per doors, and you get $500, $600, or even $700 for 1, 2, 3 bedrooms. So the math just works ultimately.
Yeah, I know. And are you planning value add repositioning, or what is the strategy?
Yeah, we always do that. We always do, and for this opportunity, just like what we did, we're going to be doing 3,000 to 5,000 per doors, and basically fix up the units and increase the rent to the comms. And based on the initial understanding and due diligence, I'm getting my PM to walk the building for me. That's about 125 rent, comparing the comps and the other competitions, and 125 differences from the market, from our competitions. So I did that from our last purchase. We go in at 350. That's the rent and average, and then eventually we able to bring up to 525, even though we did target at 475, because it's always good to be conservative. It's always good to be able to have a little bit of wiggle room, but it's the story is the same. We're looking at comms, and we identified we should be able to, conservatively speaking, raise 125 and up, and it's a really good, very well managed asset as well. Next to Cincinnati. I don't know how well you know Cincinnati. It's a city of 2.4 million people. So it's about 25 minutes from the airport that Amazon designated to be the air hub for the North America. There's only one air hub in North America,
Yeah.
and that is in Ohio, and that is in Cincinnati, and that is at that particular airport.
Okay. I mean, since I lost your presentation, I'm really sorry about that. Is there a way I can see what you shared, like what you were presenting? I mean, so you don't have to do it all over again, and we'll be in contact by mail and maybe take it from there. I don't want you to be repeating what you just said
No,
for half an hour, right?
no, look, that's okay. Like, and I didn't talk a lot on investment anyway, because I would like to keep it one to one. But yeah, I have a recording that I can share with you, Diego,
Okay,
and
that'd be perfect.
and then you can watch it on YouTube. And then if you still want to get in touch and learn about the investment, then we can get on a phone call.
All right. That sounds perfect.
Well, thank you.
Perfect. Can you send me that recording on like I registered my email, or you want my email here?
It's just so just so that I'm sure. Can you type your email on the chat?
Yeah,
And
sure.
I would just send it off to you. Usually I send email out to the whole group, but this way I make sure you get it.
And I don't even know which email I.
That's okay. That's okay. I'm just going to send one off email to you, and then you have the link.
Yeah.
Great.
You have it there.
Thank you. Well, what do you do, Diego? Like, you an investor, or like, what do you do yourself?
Yeah. We're developers and investors here in Toronto, and we have a couple of projects in the GTA or around Toronto, Greater Toronto area, and we're now launching one project in around Vancouver.
Okay. So are you looking for investment for yourself, or are you just investing, like, getting more information? So
we work with some limited partners. So it's my partner and myself. We're the general partners of some development projects here. And we have limited partners based out of Mexico and looking for apartments, for multifamily place, more than development. Some of these guys are actually asking for that. So we're starting looking into that.
okay, no, fantastic. No, thanks for sharing, and thanks for joining. I'm gonna send you off the link, and so you can watch the replay. And any questions, just let me know.
I really appreciate it, Howard. Have a great day.
And you too as well. Thank you.
Bye.
Take care. Bye for now.